Okay, first off, let's go and see what we got. We're going to monitor our positions. These are all the trades we've taken in SKF. Let's right click, analyze duplicate trade. Original trade, sold some puts, bought some calls. The original trade, if you can't see it, it's clear down here. Okay, sold some puts, bought some calls. We came back, we bought the puts back. Okay, analyze the duplicate trade, sold some calls, giving us a Van Halen or an inverted butterfly. That's what that looks like. Okay, next thing we did is today we bought back the calls. Now this is what is tough. So let's go here. Okay, analyze duplicate trade. So if we go into why did we do that? Right now we have $253 in risk when we had locked in profit of $1,000 because I'm a greedy bastard. So we got to see what's going to happen if this starts to go back up. Actually, Greece is voting and the United States is voting on increasing the debt ceiling. If one of those don't go through, it's going to hurt the banks. So what we did is we took the euro or the S&P and we said, let's measure a fib extension. Let's take the retracement off first. We measured a fib extension. We said, hey, if it extends out of here, this comes right in by previous resistance. Now, we took a fib retracement and said, you know what, let's see if it retraces. Okay, let's pull this down. We said, you know what, this thing could retrace once it gets up to 61%. Sure. Plus, it's 9 o'clock. One more hour, all of Europe's closed. All of Europe's closed. $4 trillion in the market goes offline. We usually get a reversal. But I don't know for sure, so I took off 3 of my calls in profit. I'll take off 3 more calls in profit in here and maybe sell my puts back up here. So I have to phase into this market adjustment. I have to phase in because I can't tell where it's going to turn. I'm not all knowing. It's like punching the guy in the face and seeing if he moves. Well, if that worked, try it again. Try it again. And so right now I've taken off part of the position and I'm going to phase out of profit in my calls. Now, why am I looking at ES when I should be looking at SKF? Well, same thing. Okay, same thing. I was thinking that it could fill this gap. So let's take this, and it is a thinly traded one. Okay, I know that between 38 and 61, at some point it should turn. It could come down as low as 64.79, but that's what I just showed on the other screen. If it comes down to 64.79 right here, I'm going to close the rest of them. So I'm slightly bullish now for a bounce back, okay, on my SKF. Now, nobody really knows where we wouldn't have these annoying patterns coming up. Like, let's look at ES space pound F on a 30-minute chart. Because these votes are coming up, we got an uptrend and a downtrend coming into a nose here. My bet is that the market heads down. If the market heads down, SKF goes up. But we just got it slightly bullish. Slightly. We could still make money on the upside, just not as much as we did because we took it off. That's fine because in the account, right here, if I go to trade, monitor, trade down here and look at this, I'm long a hydrodynamics and I'm not doing so good at hydrodynamics, but it's a bullish trade. I have a bullish silver trade, which is kind of bullish the market because it's bearish the dollar, and it's if the dollar drops, silver goes up. But I had to throw this one in here, the SKF, to balance the portfolio. So I'm hoping I time out of both sides right. Because if it runs up, I'm going to make more money on SLV if the market goes up. And I'm going to make more money on hydrodynamics. If it goes down, I'm going to make money going the other way.